Welcome to Small Business Update. It's John Fruitkin. I am here with Carrie Tatkin. We are talking about something that is so complex and boring that we decided to put it up on YouTube, which is the dischargeability of income taxes in bankruptcy. So Carrie is the head of our bankruptcy department, and she's been doing this for long enough to be able to be the boss. So I'm turning it over to you, Carrie. Let's talk about dischargeability of income taxes in bankruptcy.
Okay, so this is on a very basic level because income tax dischargeability is one of the more complex issues that we really deal with in bankruptcy. But for general consumer purposes, for clients that come in, many times they're simply shocked to hear that they can actually discharge and get rid of some older debt, income tax debt. So in a Chapter 7, for example, which is a general liquidating bankruptcy, sure enough, you can discharge older income taxes. In a Chapter 13, you can also discharge older income taxes. You can also use a Chapter 13 as a sort of payment plan for taxes that you cannot discharge. So that comes in handy at sometimes. And Chapter 11, of course, is the larger scale bankruptcy, and though that kind of bankruptcy can be used for a little bit more complex tax issues.
All right, so let's talk about what kinds of income tax can be discharged. You need to have 5 things you need to follow, so walk through those.
All right, so we need to make sure that a return has actually been filed. So we don't want folks to come in and say they haven't filed their tax returns in 5 years. They need to be filed, because if the IRS files one for you, you're sunk. So that is something that we need to make sure, is that a return was filed. The return itself has to actually have been filed more than 2 years before the date that we filed a bankruptcy. And the returns have been due, including extensions, more than 3 years before the bankruptcy filing. So, for example, 2018 taxes hypothetically would be due in April of 2019. We count 3 years forward. So 20, 21, 22, April of 22, those income tax obligations could be dischargeable in bankruptcy.
Unless you ask for an extension, right?
Yeah.
We all ask for extensions. Here's the time when you wish you wouldn't have. That's when you want to discharge in bankruptcy. So those will be another 6 months from that date to be dischargeable. So it's something to keep in mind. And then the taxes were assessed more than 240 days ago. What we mean by that in English is there was an audit, right?
Yep.
They added tax, and that had to have happened 240 days ago. For those of you that are, following along, that's less than a year. It's 9 months. So 9 months ago, but 240 days, and you can't be a fraud. Don't be a fraud and try to discharge your taxes.
Yep.
Don't
So
be an ostrich.
Don't be an ostrich.
Talk about this.
Yeah, so this is a problem that we have with folks coming in for bankruptcy too, is that sometimes it's easier to pretend bad things aren't happening. And, we have to always stress, the sooner the bankruptcy, the tax returns are filed, the sooner the bankruptcy time periods begin to start for dischargeability. So you get on that road of allowing your tax obligations to be dischargeable only when you file your tax returns.
So how much could you discharge?
So, well, like I sometimes say, you can discharge $1 bazillion of tax debt, and some people have $1 bazillion of tax debt, at least think that way. There's a handy little exception in Chapter 7, because oftentimes some people know that filing Chapter 7, there are debt limits, and there are there are no debt limits, there are income limits. And so those are put to the side. However, if you're filing what sometimes we call as a tax bankruptcy, those are considered to be non-consumer debts, and there's a little carve-out exception for the income requirements. And so if you can use the non-consumer loophole by having a lot of tax debt, you can file even a Chapter 7 with a high income to get rid of tax debt. So that's a handy piece of information to know.
Yeah. So tax liens, a lot of people come in, they'll say, I owe taxes and I have tax liens. So what happens with the tax lien?
So tax liens do not go away in bankruptcy. It's always better to file bankruptcy before a lien. Well, I shouldn't say always, but again, most of the time it's better to file before a lien attaches. And so we have to evaluate those things. And so it's necessary for us to pull tax transcripts and that kind of thing to determine if there are tax liens when they attach. The good news is that even though the tax lien is still out there, personal liability for those tax debts in dischargeable scenarios, the personal liability does go away. So that is something you can't be sued for, anything like that. And so you are still protected through the bankruptcy.
All right. So here's the key takeaways. Key takeaways is don't be a fraud, don't be an ostrich, and try to do this before you have a tax lien. How would I do?
Top 3.
Okay. Definitely this is an area you need a lawyer. So bankruptcy, generally, we like to say that a lot of people could file bankruptcy on their own. If you have tax debt, just don't, because the difference between understanding these rules and how they interplay together is the difference between getting them discharged and not. And by the way, if you screw it up, you don't get to go file Chapter 7 again for a long time, and you are stuck with the tax debt. So maybe it means you're waiting 13 more days to file. But give us a call, let Carrie know, look down below, and you will see her email address, and she does free consultations. So if you have a tax-related debt problem, let Carrie know, and she'll be happy to help. How'd I do? How'd I do?
Great as always.
Yeah, I thought so. Thanks, Carrie.